Hello everyone, welcome back to Just Invest Today. In today's video, we're talking about Jamie Dimon, talking about Ray Dalio, we're talking about Michael Burry, all predicting crashes. Remember that Jamie Dimon, JPMorgan's actual CEO, predicted this hurricane in the past 2 months ago. So he said there's going to be an economic hurricane, and that's all coming to fruition. So let's get into it in this video while we're talking about the potential for a market crash and what's going on in the economy, what's going on in the market, and how that's affecting stock prices today. So let's get into it, guys. Please like this video and subscribe to my channel. I'm always providing you guys with so much new content. So click that like button, click that subscribe button right now. So let's start by talking about JP Morgan CEO talking about the hurricane. And he kind of called this hiking the interest rates is going to cause people just to sell off stocks. And you see that the Dow fell 1,000 points just this past week. And this is all because what the Fed was saying during the Jackson Hole summit.
It's a hurricane. Right now it's kind of sunny. Things are doing fine.
And remember, he can kind of see what's happening in the market right now. Like, he is all about financially making sure his bank is very stable. So he's going to know what to do, what not to do, how people are spending their money. So he's kind of seeing firsthand what is happening in the economy. This is what he was predicting June 1st.
Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And
so is it going to be Sandy or is it going to be Andrew? Is it going to be light or is it going to be kind of hard on us? And when I think about this, I'm thinking about, should you be in cash? Should you like just buy companies right down as they sell off? Like, what should you do as investors? And for me particularly, I've been buying more companies. Like, I've been buying like TD Bank, I've been buying EQB, I've been buying a lot of these companies like Google. Even I've been dabbling into more Berkshire, but I haven't got into a big position. It's a light position right now. It's nothing. So those are the stocks that I'm kind of buying, and that's how I'm thinking about this market right now. It's just preparing myself as more companies will sell off in this. And you have to remember, people don't know what's going to happen in Europe because the Ukraine and Russia war is actually kind of getting more intense right now. Things are starting to heat up as like the war kind of keeps going on, as people don't know what's going to happen with gas prices, what's going to happen with inflation. And you have to realize that the Fed has to be hard on inflation right now. That's what its bread and butter is going to do because it's worrying about the general population and how it's affecting the average person. And remember, the Fed is all about kind of getting the minds at ease when it comes to the average person. So people are feeling the effects of inflation and they're going to do the best interests of the people. So what do you think they're going to do? They're going to raise rates, as they already raised the rates like 0.3% or something like that, as it's like 3% the 2-year treasury yields right now. And that's nothing. People were predicting this and they still sold off stocks. So we don't know if they're going to ease on what's going to go on into the future. If they see inflation keep going up and up, man, the market's just going to sell off even more. Like, this was nothing. This was literally nothing compared to what's going to happen in the future as the Fed keeps raising rates. Then we go to Bridgewater. Bridgewater expects up to 25% drop in stocks bonds on Fed tightening. Remember, the Fed didn't even do that much when you really think about it, and everyone knew what the Fed was going to do, and still, it didn't even do that much. At the next Fed meeting, officials will likely debate whether the interest rates should be raised by 0.5 or 0.75 percentage points. That's all. The 10-year yield inched up 3.034% from Thursday's 3.023%. Like, that's all the Fed rate is doing, and this is what's happening in the market. Can you imagine if the Fed went up to 4%, 5%, 6%? I think that's what they're really going to need to do to stop inflation, because inflation's at like 12, 13%. People are actually seeing more than that right now in the real economy. When you're buying food, when you're actually seeing energy prices, that's going to have a huge effect on prices. And he's saying there's a 25% more drop in stocks. Ray Dalio and his chief financial officer. You can see why hedge funds are sitting on more cash, why hedge funds are actually shorting more. Hedge funds are shorting more than ever. And you can kind of see the dynamics as the retail investors are actually putting more money and buying more stocks, as the hedge funds start shorting more the S&P 500, as you're seeing what the Fed is going to do. And that's what they're predicting. Hedge funds are sitting on a record level of bearish bets on the stock market. And this is what's happening. You can kind of see the dynamics right now. Hedge funds are getting increasingly skeptical about this big rally that broke out in the middle of the bear market, because you have to remember the S&P run up a crazy amount, like 17%, which is amazing. Net short positions against the S&P 500 futures by hedge funds have reached a record 107 billion this week. Just this week, man. $107 billion. So what do you think hedge funds are having in their mind? People are sitting on the cash. They're not putting money into these cheap stocks, or cheap stocks if you think they are cheap. So what do you think is going to happen in the market? People are going to think the market's going to crash. So man, are they putting that in the sphere to make the market crash? Who knows how the market is going to react to this? But in my opinion, as soon as you think the market is going to go extremely bearish, usually it does the opposite. So maybe we could see another run. Who knows? But man, there's a lot of interesting things happening in the market right now. You also see someone like Michael Burry. Again, he just continues this onslaught on these bearish bets. You've seen him sell off all his stocks except for Geo, but he continues on Twitter to make these bearish bets. And he's expecting more of a crash than anyone else other than Jamie Dimon of Dalio. Doesn't even matter. He is more bearish than those guys. The recent spending bills, including the student loan forgiveness, remember, this is increasing inflation. He's actually putting more money in the market, and people don't realize what they're doing when they're doing the student loan forgiveness. Like, Joe Biden is literally putting more money into the system, increasing inflation. People are going to have more money to spend, or they're going to think they have more money to spend. So this is going to increase what people are perceiving to have. Now approaching 2 trillion this year, we have an emergence of fiscal put, not just for the COVID anymore. Because remember what he did with COVID, he put so much money into the system and will be as good for America's economy as sugar for babies. So this loan forgiveness is just giving more sugar for babies. The whole COVID stimulus, that was more sugar. Also, he's doing the infrastructure bill when it comes to semiconductors. That's just stimulating more money into the system. There's a lot Joe Biden's doing just to stimulate the system. How do you think that's going to turn out? Is that going to cause a bigger crash? Not just the COVID stimulus, not just this loan forgiveness, not just the infrastructure bill. So you can see how people are just so bearish on the economy. Any rally is just going to be met with, man, this market is going to crash again. These are just bear market rallies. They're not sustainable. They're not real. What are you guys doing during this bear market, man? This recession is hitting hard. Inflation's at an all-time high. You see the Fed raising rates. Are you holding on to cash? Are you actually buying more stocks? Are you just waiting to see what happens? How are you reacting to all this news? Guys, can you please like this video and subscribe to my channel? Peace.